Welcome back to the Splash Live, Greater West Bloomfield's live daily news and talk show. I'm Tyler Kieft alongside Diane Chabon. Well, we've been hearing about it for years now at this point. Inflation taking a toll on the prices at the pump, at the grocery store, really in every element of our lives, whether it is those day-to-day necessities, housing, car prices, and so on and so forth. Some potential good news on certain fronts related to inflation, but not necessarily the case in the local area if you're going to the gas pump of late. Here to discuss these sort of conflicting situations we have with inflation in our local area and across the U.S. is Dr. Michael Greiner, Assistant Professor of Management at Oakland University's School of Business Administration. Dr. Greiner, thank you for being with us today.
It's great to be here as always, and great to see you.
And good to see you as well. And it seems on the inflation front lately, some good news, but with that good news, some added confusion that makes us question, is it good news or is it good news? Where are we at with this as inflation was reported by the Associated Press to sort of ease toward the end of July and have actually some favorable numbers in comparison to recent months and certainly recent years?
Yeah, inflation is kind of a complex thing, as we've talked about here before. The way that the inflation is calculated is basically the government will look at a basket of goods and services that the average consumer will buy, and then they kind of look at how much the prices overall for that basket have increased. So you can see where if you have one thing that increases a lot or decreases a lot, then that can have really a strong influence then on the rest of the basket. And we've seen that month after month. I mean, from the beginning, there was the whole issue of computer chips. Remember, we had that whole issue where there was a shortage of computer chips. They couldn't make enough cars as a result of that, and computers and that type of thing. So suddenly there was this big uptick in the price of cars and in used cars. Well, that's gone down quite a bit. Then there was this, what people called revenge spending, where after COVID, people wanted to go on trips and go to the restaurants, things that they couldn't do during COVID. Well, that resulted in a big spike up in the price of airfares. Well, the price of airfares have now come down. So as you look at these things bit by bit, it seems like overall prices are coming down. We've got some good news in some of the daily things that people purchase, which are groceries, for example. Groceries seem to have come down. There was a spike up in eggs. I mean, it's just unbelievable, all these different things that have happened. There was a shortage of eggs because there was bird flu that was affecting the production of eggs. Well, that seems to have been dealt with, and as a result of that, now the price of eggs has been coming down. And one piece of good news, though, is that I guess it's mixed news in a way, is that the wages continue to be going up. So that means that the average person, most people in the United States right now, their wages actually on a real basis, that means the amount that they're able to purchase with their wages is actually improving. So that's a positive. But on the kind of cautionary note, part of the problem that we've got with inflation right now is that you've got these services where prices are going up. Services, most of their spending is on wages, because that's where somebody, say, delivers something to your house or is a server at a restaurant or does some service for you. Well, most of that cost then is going to be wages. And if wages are going up, then that in itself is going to be something else that pushes up the cost of things. So it's going to be interesting to watch over the next couple of months. I think everybody's cautiously optimistic now that inflation seems to be cooling, but we're not out of the woods yet.
And it seems like in some regards, prices are either more so leveling off than reducing, with inflation, core inflation remaining at a tame 0.2% in July, which is relatively low from June to July compared to past months and certainly in past years. We've seen across different sectors that prices have eased in areas like used vehicles and electronics, as you spoke about, as opposed to in years past. But what's interesting is, even in our local area, the Oakland Press earlier on this week, in a report from AAA, showing that gas prices are on average reaching about $4 per gallon. And this has been kind of a continuous ebb and flow of these prices in recent weeks here in Michigan, after in the past months we had seen pretty consistent drops in gas prices. So while some commodities are seeing these prices level off, it does seem like others are seeing prices kind of ebb and flow and really trend up, sort of like we're seeing with gasoline prices. So what's impacting that in comparison to some of these other prices? Certainly there's some global geopolitics playing a factor in gasoline and oil prices.
There sure are. You're absolutely right about that. And this to me, I love talking about this. I'm not enthusiastic about gas prices going up, but I love talking about this because it really shows how global economics and global policy really impacts us at the local level here. I mean, literally, the amount of money you're paying for gas at the pump is impacted by what's going on in places like Ukraine and Saudi Arabia and China. Well, how are those things impacting us? Well, on the one hand, with Saudi Arabia, of course, you've got the kingdom there. What they've been trying to do is actually reduce the amount of oil that they produce. Saudi Arabia, of course, is the leader of OPEC, which combines they produce about 40% of the oil in the world. And Saudi Arabia itself is the world's largest oil exporter. They're not the world's largest producer. That's the United States, but the world's largest exporter is Saudi Arabia. And so as a result of that, when they reduce the amount of oil that they're producing, that has a meaningful impact then on the amount of oil that's available out there. And while we love to blame one person or one group or anything like that for the change in oil, the way that the price of oil is set is on the global market. There's this global market that decides, hey, we've got this much oil, we have this much demand, and then it's just a simple kind of supply and demand curve, like we all learned about in economics 101, which is that if you have a higher supply and you've got lower demand, prices are going to go down. If you have higher demand, lower supply, prices are going to go up. Well, right now what we've got is as a result of Saudi Arabia reducing the supply, well, you've got lower supply, so that's going to drive prices up. Similarly, we've got, of course, what's going on in Ukraine. Now, that's why the war in Ukraine, when it first started, that's why oil prices spiked initially about a year and a half ago. And they went up quite high, as I'm sure everybody remembers. Certainly I remember that. Since then, when people realized, oh, maybe it's not so bad, prices kind of went down. Well, that's kind of then what prompted Saudi Arabia to say, whoa, we want prices to go back up. So they reduced then their output. So why then are they suddenly going up in addition to Saudi Arabia decreasing supply? Well, the other big piece of the puzzle is demand. And there you can look at China, because you have to remember, for the last couple of years, China had this zero COVID policy going on where they literally locked down the entire country. Well, I'm sure everybody remembers how things were here back when much of the country was locked down as a result of COVID, and people weren't driving very much, and there wasn't much demand for gasoline. People weren't, as a result of people not going to stores, restaurants, work, anything like that, suddenly, you had less demand for it. Well, that was going on in China until recently. And granted, although China's bounce back has been very slow and their economy has really been suffering, as we've talked about before in this show, they are demanding more and more gasoline right now, which again, what that ends up doing is demand goes up, supply goes down, prices are going to go up. And so we're seeing this on the global scale because most of the cost of what you pay at the pump goes directly back to the price of crude oil and what the oil companies are paying to buy it on the global scale.
Dr. Michael Greiner joins us from Oakland University's School of Business Administration on today's edition of the Splash Live, talking about the different impacts we're seeing of inflation sort of leveling off in some regards, but not really leveling off in other regards, with supply and demand also playing a big factor in that, particularly on the gasoline side. In the state of Michigan, the statewide average at the beginning of this week, right around $3.91 a gallon. In Metro Detroit, with some of the lower prices on average across the state of Michigan, $3.87 a gallon, along with Benton Harbor tied for the lowest. The highest prices in Michigan are in mid-Michigan, in Jackson, and in the northern part of the state, and in the UP in Marquette and Traverse City, with prices $3.97 and $3.96 respectively. Dr. Greiner, going back to the overall issue of inflation and battling this on the nationwide level economically, how does this impact what the Federal Reserve's strategy is going to be now and going forward, considering there's been a bit of a leveling off, but we've seen this in the past? How might that impact them raising or not raising interest rates going forward?
Yeah, that's a great question. And it just shows again kind of how all these things are related to each other. On the one hand, gasoline prices are not good news. My hope is that once we get past the Labor Day weekend, maybe we'll start to see them go down a little bit again, because it deals, the question is demand. Right now, there's always high demand in the United States leading up to Labor Day weekend. So maybe once we get past that, things will settle down a little bit. Hard to say. Saudi Arabia also has extended its increase or its cut in the in production through the end of September. So maybe once we get to October, we'll start to see that cool down a little bit as Saudi Arabia is looking at everybody else making money selling oil and saying, "Wait a minute, we're sitting here on the sidelines. Everybody else is making money." So that could happen as well. But one of the things that the Fed does when they look at inflation is, again, because it's calculated based on this basket of goods, what people are buying. Well, when you think of like the consumer price index, the CPI, that's the average that people are paying. A big chunk of that would include things like gasoline and other energy and groceries. Well, those things tend to bounce around a lot, as you expressed earlier. With gasoline, it's up, it's down, it's all over the place. It doesn't tend to increase or decrease, or at least have kind of the steady change that you see in most other kinds of goods and services. So what the Fed will frequently do is that they will look more at core inflation. And what core inflation does is that they'll strip out the cost of gasoline and food, because they know those are things they can't control, and that they'll go up, they'll go down. They're so volatile that they have an outsized impact on the measurement of inflation. And instead, they'll focus on these other things that they have more control over, things like housing, for example. The reason that you have a big impact on housing is because the fact that if they increase interest rates, suddenly the mortgage rates that people are paying are going to go up. People might be less inclined to buy a new house. That then kind of winds its way then through the whole economy. Well, the Fed right now, they're looking at the core inflation. Core inflation, frankly, is looking pretty good. So my guess is that right now, unless we see some big shock in the numbers that are coming up in the next couple weeks, that we'll probably see the Fed hold the line right now. That they're probably going to say, things are looking pretty good. We're going to see the way things develop. But by the same token, you can bet that they're going to be concerned about the fact that gasoline prices are going up, because that can then kind of wind its way into other parts of the economy. But they're especially going to be paying attention to those wages. They want people to get pay increases, obviously. They want people to be doing well. They want people to be employed. But by the same token, if the job market continues to be too hot, then that can be something that drives up inflation as well. And one way to cool that down then is by increasing interest rates, which then potentially increases unemployment and will kind of cool down the job market, reduce wages, that type of thing. So the hope is, and I think this is that what everybody's hope is, that we'll continue on the track that we've been on, which is that we see inflation cooling, we see the job market remaining robust, people's wages are starting to actually go up on a real basis, but not too quickly. And if we see these trends continue, then I think the Fed's going to be feeling pretty confident that they've got us on the track toward a soft landing, which means essentially getting control of inflation without having a big recession. If they're able to achieve that, that would be a huge success, a huge policy success. And I think that's what everybody's hoping for. But again, the jury's still out on it.
The one thing that has been consistent is the inflation of the Great Balancing Act to battle inflation from the Federal Reserve and as well as other state and federal powers. Dr. Greiner, thank you so much for joining us.
It's great to be here, Tyler. Have a great rest of your week.
You as well. Dr. Michael Greiner from Oakland University, as we talk about the continued economic impact of inflation, not just at the U.S. level, but also here in the state and locally here in Oakland County with gas prices on the rise of late in our local area.